Opendoor just won't leave the headlines, folks. We got news of a new interim CFO last week. Also, Kaz, the new CEO, is sleeping in the office. And also, speaking of Kaz, he's bringing in an old buddy from the Shopify days. We will, of course, be covering all that news on Opendoor. We will also lay out a watch list of stocks that you need to be paying attention to beyond Opendoor. And also, we will break down the latest macro news in this episode, including President Trump's push for nuclear energy, and also one person's belief why Tesla could be going much higher over the next decade. All that and much more on this week's market prep video. As always, if you get value from these videos and you want to support the channel, help us out with the algorithm, make sure to share with a buddy, like, subscribe, and don't forget to follow us wherever you listen to podcasts. And now, folks, let's roll. I'm Brandon. Welcome back to Stonkcast, the market show for the average Joe. Whether you're a diamond-handed degenerate or a more conservative swing trader or investor, we've got you covered. If you'd like to support the channel beyond liking and subscribing, make sure to check the links in the description. All right, folks, it's time for the market prep video. Yet again, I hope you have had a fantastic weekend. We got a lot to get into. We had some interesting news from President Trump meeting with UK. Some interesting things regarding nuclear energy, some interesting pieces on Tesla and some bullish cases there. But of course, we got to kick it off with Opendoor, the most captivating story in the market. So let's take a look at this piece to kick it off from Real Estate News. Opendoor taps longtime finance exec as interim CFO. The leadership shifts continue as Christy Schwartz, who has also served as the iBuyer's chief accounting officer, steps into a role she held from 2022 to 2024. The shakeup in Opendoor C-suite continues, this time with the company announcing a new chief financial officer. According to an SEC filing posted September 19th, Opendoor's current CFO, Selim Freya, is leaving the role effective immediately. Christy Schwartz will step in as interim CFO starting September 30th. Schwartz had previously served a lengthy stint as interim CFO with Opendoor, occupying the role from December 2022 to November 2024. Other roles that Schwartz had filled at Opendoor include VP/corporate controller between August 2016 and March 2021, as well as chief accounting officer from March 2021 to May 2025. Schwartz's compensation plan includes an annual base salary of $1.2 million and just over 400,000 restricted stock units. So we have, of course, been seeing a flurry of movements in the C-suite for Opendoor. Of course, we had Carrie Wheeler, who stepped down about a month ago, and then you get Kaz in there, and then you get Keith Rabeau, Eric Wu back on the board, and now we're going to switch up with the CFO. Now, why did the prior CFO, step down or leave the company, Selim? That's a great question. One I don't exactly have an answer to, but I think a lot of people can speculate that, hey, you know what? Maybe potentially this is one of the C-suite leaders that has been egregiously selling off shares when the stock was tanking, which is one of the complaints that Eric Jackson has had regarding some of the individuals within the company, that they need to go. They never believed in the project, so why should they even be there? Now, I'm just speculating, of course, for all I know. Maybe she stepped down on her own, but the interim CFO that Kaz and team have put in place is somebody who has been around the block, so to speak, with Opendoor. So I think that's great news. Christy has held many positions within the company. She's been around. She's seen different components, different aspects of it. And so we will wait and see what Kaz and team want to do as far as a permanent CFO, who they're going to bring in there. But as of right now, we do have an interim CFO. So I just thought that was interesting and wanted to make sure you were aware of that. Speaking of Kaz, this was a very interesting post from Anthony Pompliano. He says, new open CEO at Canada Kaz is sleeping in the office and going full hardcore mode to turn the company around. This is literally the first week that Kaz has been with Opendoor. He, of course, started, last Monday, first full week, and the man is ready to go to work. If you're an Opendoor investor, you gotta love to see this. I mean, the man is literally sleeping in the office, right? This is very, very interesting the way things are developing right now. Kaz actually came out with his first official interview as Opendoor CEO last week. If you haven't seen that, I would highly encourage you to go check it out. Basically, everything I heard him say in that 20-minute interview, I loved. As soon as I got done with that interview, I wish I could have doubled my Opendoor position. That's how bullish I was after hearing it. Now, did Kaz give the intricacies of what direction they're going to take the company? No, of course not. He's only been in role a week, right? We still got a lot of ground to cover. However, his whole philosophy, right, and just his mindset heading into this, his vision for the company, I think is massive. He definitely strikes me as more of a visionary, and I'm starting to see now, as I'm sure a lot of you are, why the board really, really wanted this person in there. And he also said if it wasn't for Keith Rabeau and Eric Wu coming back to the board, he would not have taken this position. So it's not as if the board is just pulling pieces together, hoping it fits. No, these are all individuals that agreed, we're only going to do this if we all do it together. And I think that just makes for a better camaraderie and just overall better environment at Opendoor. So I thought this was a very interesting tweet from Anthony Pompliano. You got Kaz sleeping in the office. He obviously means business. And there is only one other CEO that has been known to do this. And you guessed right. It is Elon Musk. So the fact that we're going to already put Kaz in the same camp as Elon, hey, I'm okay with that as an Opendoor investor. So I'll take that. All right, let's move on to another piece here. First of all, I want to cover some interesting news regarding one of Kaz's former co-workers at Shopify that is coming to Opendoor. So we got some more movement this past week as far as who is going to be on board. So this from BetaKit. Roach Capital's Fahd Ananta follows Kaz Nejatian to Opendoor. Another Shopify alumnus heads to Silicon Valley's latest meme stock. Roach Capital lead Fahd Ananta is the latest Shopify alumnus, albeit a distant one, to join San Francisco-based real estate tech firm Opendoor. Ananta was a product manager at Shopify, but left the company in 2020. He now follows former Shopify COO Kaz Nejatian to Opendoor after Nejatian was appointed CEO of the prop tech company last week. Ananta announced the new job in a post on X, calling it, quote, the biggest bet of his life. He says, quote, I hate to lose, so I'm going to give this every ounce of my energy and focus, Ananta said. Opendoor is a tech-enabled platform for buying and selling residential property. Ananta told BetaKit in a text message that he will lead, quote, everything on the buyer side of the company. He added that he is not permanently relocating from Toronto to San Francisco right now, but didn't rule it out. So I think this is also a very interesting piece here, as we can see that clearly Kaz has some individuals in mind for who he wants to be bringing over to support him and the team, right? And Opendoor on this next journey, on this AI initiative, on leading Opendoor to be what everyone has thought it could be this entire time. Obviously, Eric Jackson being the original champion of this vision back in July, and essentially saying, look, this could be a major disruptor in real estate. And the fact that you got Kaz already getting to work, bringing in people, I think is massive. Obviously, he has a relationship with Fahd from the Shopify days, and so very excited to see what Fahd can bring to Opendoor, helping out with that buyer side. And, you know, just to, obviously we don't have a clear-cut idea of what he's going to be doing on the buyer side. That can be a bit vague, but just to give you some ideas of what we could expect to see, Fahd will, you know, most likely be helping out with buyer experience, right? He'll probably oversee everything related to, you know, people who want to buy homes from Opendoor, digital tools, pricing offers, etc. He'll also most likely help out with operations and execution, strategic direction for buyer side growth, right? And then coordination with, you know, broader company changes. I'm sure he'll have some say in some of that as well. But I think this is exciting news as we continue to see Kaz and the board kind of build out, quote unquote, their dream team, right, if you will, on, this next phase for Opendoor. And here's another thing that I forgot to bring up, I think is noteworthy when we talk about Kaz, right? We're talking about a guy who turned down close to $300 million to stay with Shopify. So just ask yourself for a second, right? Would he really come over to Opendoor and take a salary of $1, and basically have everything else just be incentives for certain stock prices getting hit? Why would he take on that risk and pass up guaranteed money at Shopify north of $200 million, right? Unless he truly believed that Opendoor was sitting primed for a very, very interesting run, right? If he didn't believe in the trajectory of the company, the value of the company, right, and what this thing could really turn into, if he truly didn't believe in that, why would he pass up all that money, folks? So I just want you to think about that, because I heard that last week as well, as far as the money that he passed up at Shopify. And folks, that is very notable to pass up that kind of money. So interesting stuff going on. You love to see it if you're an investor. If you're short, you don't exactly love it. And speaking of Opendoor, let's hop into the charts. Let's take a look at what we saw this past week. Listen, Opendoor overall, this past week, in my opinion, was kind of boring, and that's okay. It doesn't have to be parabolic, up or down, every week. It's good to, as I've said before on the show, it's good to have moments of consolidation. It's good to have moments where things kind of cool off. And, for what it's worth, we are holding better than half of that initial surge that we got of 80% last Thursday when Kaz was announced as the new CEO. So we are holding better than half of that move still, after a week. So the momentum is most definitely there. But want to take a look at the chart here and just kind of highlight some key levels, some things that I'm paying attention to. First of all, on the daily chart, I want to note that the RSI has had a chance to cool off down here in the right corner. As you can see here, basically we have an RSI that is currently sitting right around 67. So we're at 67 on the RSI, below 70, which is technically overbought territory. That's great to see, right? Love to see that. Now, as far as the volume that we saw on Friday, keep in mind Friday was a red day. We were down just over 3.5% on the day, and we closed out the session at 957. However, if you take a look at the volume that we had on Friday, it was one of the lowest volume days that we have seen since August 28th, almost a month ago. And as I've said before, when you see low volume on red days, that is a bullish sign. I mean, we can just take a look at the past 2 weeks as an example. Take a look at this giant green candle that we had. This is when Kaz was announced as the new CEO. And of course, we had the giant volume that went along with it. And then take a look at the next 3 days. See how the volume just kind of went down, down, down on these red days. And then you get another green pop and look at that volume pop. And then Thursday and Friday, technically red days, and look at the volume going down again. So that's what you want to see. You don't want to see giant volume on a red day because that shows conviction. Of course, seeing giant volume on a green day shows conviction to the upside, which if you are an investor or a bull on Opendoor is exactly what you want to see. Now, as far as some of the levels that I'm paying attention to, right, on a daily level, would have loved to have seen us reclaim $10 on Friday, but hey, it didn't happen. Right now, we are kind of toying around with basically a 5-year weekly chart Fibonacci level of $9.65, right? That's the level that I am looking for us to reclaim. If we cannot reclaim that, we could see a floor at $8.44. That's another Fibonacci level I'm looking at right now. And to the upside, this next week, if momentum is able to continue, we build a base around this like 950 area, get back above 10. I think if we can get above basically 10, I would say 1030, which was the high from Friday, then we should have a clean shot to a new 3-year high, getting above the previous high that we saw on Wednesday last week of 1087. And then as far as some Fibonacci extension levels that I'm paying attention to, basically just going to be 11 and then 1174 and then 1380. Those are some of the immediate levels that I'm paying attention to on the upside for Opendoor. But as of right now, as you can tell for those on YouTube, this is a 3-month daily chart, right? And what does it show you, folks? It shows you that we are going from bottom left to top right. That's exactly what you want to see if you're an investor in this company right now. It is bullish. We're above the major moving averages. It looks great. So no, I'm not really too concerned about how we ended the week. In fact, I'm kind of excited that we were able to cool off the RSI a little bit because it makes it more realistic for us to continue the rally. All right, now let's take a look at the options chain for Opendoor and just take a look at what we saw on Friday. And here's the thing. Yeah, it was a red day, but the options chain, folks, was still bullish. Had a put to call ratio 0.47. You had nearly 1 million calls transacted and nearly 500,000 puts almost. So the options chain continues to remain juicy. A lot of action happening on there. You had a total of almost 1.5 million transactions happening on the options chain on Friday. Great to see. Current IV percentile is 39%. 39% of the time in the past year, the implied volatility has been lower than it currently is. So that IV percentile is looking good if you are looking to be a buyer of premium. You don't really want to be a buyer of premium when the IV percentile is like 90%, 100%. You're just buying inflated premium, and even if the stock moves in your favor, if it doesn't move violently enough, you could still be losing money on premium there. So that's why I'm always trying to highlight the IV percentile. So right now it's looking more attractive if you're looking to buy calls or, also with puts, right? Because premium goes both ways. Of course, I'm looking at calls. I'm, invested in Opendoor. So it is getting more attractive. So that is great to see. Now let's take a look at October 17th, which is the next monthly expiration. And as of right now on the call side, right, as far as open interest goes, the most contracts of open interest are currently sitting at the $10 strike, which makes sense because it is a key psychological level. We also had some notable action happening on Friday at the $13 strike level as well for October. So we will be paying attention to that and seeing where we go from here. And in case anybody was wondering, hey, we had a couple down days, not a lot of volume, maybe this thing isn't popular anymore, think again. According to apewisdom.io, trending stocks on Reddit in the past 24 hours, Opendoor, number 4, folks. So we are still there. We have the momentum. Eric Jackson's still doing his thing. And, as of right now, I'm still very, very bullish on it. I'll be excited to see where we head this next week. All right, let's take a look at some other stocks that you need to be paying attention to. So this is not just strictly an Opendoor, channel, podcast show, whatever you want to call it. This is the market show for the average Joe, right? And being on brand, I want to make sure that I'm bringing you some other plays, some other notable, stocks to be paying attention to because of the potential, right? And so first of all, I want to highlight a couple in the energy space. Oklo has been soaring lately. Also, you got EOSE. This is a next-gen energy storage play. And really both of these have been, gaining a lot of traction lately, showing a lot of volume, things like that. So definitely want to have those on your radar. Now, as far as AI infrastructure, high-powered computing plays, these are ones that I've already talked about in previous episodes, but I want to highlight again. That would be Iron and Cypher and Bitfarms. Now, to be clear, Iron and Cypher are plays that Eric Jackson is in. He is long. He is bullish on those, right? Iron is a Bitcoin plus AI infrastructure play. Cypher is hosting plus high-powered computing growth. And then Bitfarms is mining, pivoting to AI compute. And just in full transparency, I do hold Cypher and Bitfarms. I am long those as well. And then in the aerospace, space, right? And also as far as satellites, some plays here. Ticker symbol RKLB. This is owning the space race. And then ticker symbol ASTS. These are satellites powering mobile. And then robotics plays. You got ticker symbol RR, ticker symbol SERV, and then ticker symbol ONDS, right? So these are going to be in that automation, drones, robotics space, and then obviously finance/real estate. You got Opendoor, you got SoFi, and then as far as health and wellness, you got Hims and Hers, which is a highly, highly shorted stock. And then you got ticker symbol OSCR, reinventing health insurance. And then you got Lemonade, folks. In case you haven't heard of Lemonade, this is a very interesting one. I took a position in actually on Friday. Ticker symbol LMND, Digital Insurance Disruptor. They're essentially trying to do to insurance what Opendoor is trying to do to real estate. So these are all very interesting plays right now. Me personally, this is not financial advice, of course. I am in Opendoor heavily. In addition to that, I'm in Bitfarms, I'm in Lemonade, and I'm in Cypher. Those are the plays I'm in right now. But these are all very interesting plays, interesting stocks. And, some of these, especially on the energy side, really just got more juice this past week due to some of the things that we've been seeing from the administration, which we'll get into here in a minute. But again, just wanted to put those on your radar. Let's move on now to some of the major indices and take a look at really how we ended this past week. Obviously, we had the Fed rate decision midweek last week. And if we do a quick check-in here on the S&P 500, we did close at a new all-time high on Friday, hitting 66.64. And really the next target for me on the long haul for S&P is going to be 6,900, just a hair below 7,000. And it really doesn't seem like there's anything stopping us from hitting that right now. Also, quick check-in on the Qs, the tech-heavy NASDAQ. So new all-time high on Friday as well, actually touched 605 cents. That is very impressive for the Qs. Another giant green day there. And then if we do a quick check-in on IWM. So this is very interesting. These are small caps, of course, and small caps hit a new all-time high as well on Friday, topping at 245.57 cents on IWM, the ETF for the small caps. So small caps now catching up to tech and the S&P, but looking very good. Quick check-in on the VIX. The VIX on Friday closed at 1545. Not a lot of action happening there at all. And then let's do a quick check-in on Bitcoin. At time of recording, sitting at 115,841, up just 0.1% so far. Again, at time of recording here. But it looks like Bitcoin is still really hugging in the short term this support level of 115. I would love to see it get back above 117, which it hit on Thursday. That would definitely give a lift to things like Bitfarms, Cypher, and whatnot. But just overall, it does appear ever since the rate cut that, Bitcoin being a risk-on asset is benefiting from that. So I would expect a high probability that, we're going to see a new all-time high on Bitcoin very, very soon. All right, let's move on to some macro news. So I want to kick it off, first of all, with this article from Barron's. Nuclear stocks are soaring as Trump makes reactors part of trade talks. Nuclear energy stocks were surging on Thursday as the Trump administration makes the industry a centerpiece of its trade talks around the world. Several stocks related to the nuclear industry were up after the US and UK agreed to pursue nuclear energy on joint tracks, opening the UK nuclear market to more American technology. US reactor developers Oklo and NuScale Power rose 12% and 7.6% respectively. Nuclear fuel developer Centrus jumped 14%, and nuclear tech company BWX Technologies rose 3.5%. Nuclear energy was one of the top issues discussed by US and UK officials during President Trump's visit to the UK this past week, along with artificial intelligence. In a memorandum of understanding released on Thursday, the White House said that the two countries will collaborate, aiming to speed nuclear reviews and deployment. Historically, it's taken the UK 3 or 4 years to license a reactor. The country now plans to finish review in 2 years. The US has set a goal for an 18-month review process. So this is interesting. Obviously, we had President Trump meeting with the UK Prime Minister this past week. And, one of the big concerns right now, really for both sides, the UK and the US, is, hey, where is China at right now in the AI race? That is obviously a concern for both parties. And one of the big concerns right now when it comes to AI is that we are just simply not going to have enough energy. That's one of the things that Eric Jackson highlighted in an X post that I shared in the last episode. He said you couldn't be long enough iron and cipher due to the fact that the US is projected to not have enough energy to support AI demand next year. And so obviously this is one of the major concerns for President Trump and the UK Prime Minister in order to get both countries where they want to be in relation to China when it comes to those AI initiatives. And so one of the things that both countries have been exploring and that President Trump is definitely trying to implement into trade discussions is using nuclear energy, right? Using nuclear power to help fuel the demand for AI for these data centers, right? What they're going to need. So this is very interesting. We'll definitely be paying attention to any updates on this because here's the thing. I talked about this in a previous episode. I personally don't believe we are in an AI bubble. I think we are kind of at the beginning of a modern day gold rush, if you will, when it comes to AI. But in order to fulfill that vision for AI being this major market, you obviously need energy to support it. And basically nuclear energy is going to be the play here. And that's why you have stocks like Oklo soaring, NuScale Power soaring, because investors recognize these are going to be major players for, countries to get what they need from AI. So just thought that was interesting. And then kind of continuing in that lane, this is an article from Market Watch. Forget chips. The next battleground in the US-China AI race is nuclear power. So this article says investors are paying close attention to the computer chip war erupting as the US and China race for global leadership in AI, yet Wall Street is focused on the wrong battle. The real winner will come down to something much less flashy. Energy, specifically nuclear energy. After all, the most advanced AI chips in the world are useless if you can't turn them on. Nuclear energy is rapidly becoming one of the foremost solutions to power the AI boom and prevent impending energy shortages. You have this quote here from Richard Windsor, founder of the research firm Radio Free Mobile. He told Market Watch, quote, "I think that one of the best sources of data center electricity is going to be from nuclear power, and of this there is very little doubt." He says, if you want reliable electricity without carbon, nuclear is pretty much your only option. According to Bank of America, data centers used to power AI globally could use more energy than the entire country of Japan by 2026. That's insane. According to the research provider Bloomberg NEF, the amount of electricity flowing through global electricity grids is expected to surge 30% as soon as 2030. Companies like the cloud infrastructure provider CoreWeave have identified energy as a critical bottleneck for AI development. So this is, a major problem for just the AI space in general. As I said, right, just simply not having enough power, not having enough energy to fulfill, all these hyperscalers and their AI demand, right? Think about like Meta, Microsoft, right, which just struck a deal with Nebius, right? Because they need the infrastructure, they need the energy. Nebius has that. But as more of these major hyperscalers are looking to fulfill these AI demands, we're going to get to a point, if we don't figure out something on the nuclear side or otherwise, where we just simply don't have enough power. So just thought this was an interesting piece, and it's part of the reason, of course, why I'm kind of looking at some more nuclear plays as it comes to stocks for some of the bullish upside as we continue to see what President Trump and his administration are going to do to supply basically the demand on the AI side. So, keep in mind that, you got President Trump saying, build, baby, build, as this article just kind of lays out here further on. Excuse me. The U.S. government has picked up on the nuclear opportunity with a sense of increasing urgency as it aims to close a reported 10 to 15 year development gap with China, according to the Energy Department. While U.S. energy capacity overall has been stagnant for over a decade, China is adding the equivalent of the entire U.S. power capacity to its own grid every 18 months. At the current pace, China could overtake the U.S. in nuclear capacity by 2030, according to Bank of America's trend. So yeah, obviously we need to catch up with China if we're going to be a part of basically the market space when it comes to AI. If we want to compete with China, we need the energy to do it. So this will definitely be a piece to be paying attention to and see how it shakes out, right, in some of these trade deals that President Trump is looking to get done. All right, let's move on to this piece now, also from Market Watch, regarding Tesla. So this article says how Tesla's metamorphosis may see its stock surge to $3,000 in just 10 years. That's right, you heard that correctly, $3,000. Now even small caps have joined the party. The Russell 2000 just closed at its first record high since November 2021. It is a sign that the market rally is broadening. That will be welcomed by investors, but that's not to say some analysts are no longer excited about the big tech stocks that have done much of the market's heavy lifting. One such is Tesla, whose shares have surged 22.6% in the past month, and now Ben Callow, senior research analyst at Bard, is upgrading the stock to outperform and raised its price target from $320 to $548. In a note published Friday, Callow makes clear this is not about Tesla as a car maker, where business has been increasingly dour. He says, quote, relatively muted stock reactions following a series of less than stellar quarters and investor inbounds regarding long-term initiatives lead us to believe focus has increasingly shifted to the future for Tesla. Indeed, this argument from Tesla bulls that investors should all but dismiss the falling electric vehicle sales and focus on the company's robot and driverless taxi prospects has been ingrained for some while, but Callow takes the metamorphosis tale to another level as he models how the lofty product, market capitalization, and earnings target of Elon Musk's proposed $1 trillion pay package may see the share price surge as Tesla is increasingly viewed as the leader in physical AI. So obviously we know Elon Musk has some pretty bullish views for Tesla when it comes to AI. He has some very aggressive plans for what he wants to see happen when it comes to physical AI and building out robots. And so basically this analyst, as this Market Watch article kind of lays out, he basically just kind of lays out his path for Tesla having an insane share price. He's basically saying, Tesla must reach 10 million active full self-driving subscriptions, which can be achieved by 2035 if the 20 million of vehicle sales have 50% of buyers choosing the software. He then says there's the target of 1 million bots, not specifically Optimus robots as some initially thought. It's a more general term that leads Bard to believe Tesla will have additional real-world AI products in the future. However, they add, quote, for the sake of our exercise, we assume only Optimus and infer economics based on Musk's comments regarding a $20,000 per unit cost and an assumed 50% gross margin. And then he also puts in something about Musk's package requirements from Tesla. But all in all, essentially what he's saying here is that putting all this together, Bard reckons that if Tesla reaches these milestones in 2035 with volumes equal to the minimums outlined in the pay package, then there's a pathway for Tesla's market cap to exceed $5.5 trillion. That would be based on an EBITDA multiple of 65, leading to a share price of $1,412 after taking into account the dilution from Musk's additional stock. And then he goes on here to say he's basically calling it a bull volume case where Tesla achieves in 2035 approximately double the pay package volume milestones, and then the company can reach a $12 trillion market cap based on EBITDA multiple of 65, leading to a share price of just over $3,000. Very, very wild price targets here for Tesla. We just had NVIDIA crack into the trillion market cap, and to imagine Tesla being, 12 times that is pretty wild. But I do believe, I don't know about 3,000. I'm not a fortune teller, but I am very, very bullish on Tesla regardless. And it is definitely one of those stocks for me that I'm, kind of looking at for, maybe some calls in the midterm. maybe about like 3 months out, something like that. Obviously, Tesla is a way, way pricier stock than Opendoor, for example, right? So the options premiums are going to be a bit pricier, but just taking a look at the chart from a technical standpoint, as I like to do, it looks very, very bullish. I'm very excited about where this thing could go, and I do believe we're going to hit a new 52-week high very soon on Tesla. We are currently right at that 23% Fibonacci level. If we break above that, we have pretty much a clean shot to the 52-week high we had back in December of 488. And just a quick note, though, on the RSI for Tesla. Right now, it is a bit high. It is a bit overbought. The RSI is currently sitting at 76, which for something like Opendoor isn't insanely overbought, but for something like Tesla, it is a bit. So, maybe we get a small pullback initially before we take a crack at 488, but I do expect that to happen very soon, in my opinion. So let's move on to the economic calendar. So we got some interesting things coming up this week. First of all, Tuesday, September 23rd, we're going to get S&P Global Manufacturing PMI and Global Services PMI. That comes out at 9:45 a.m. Eastern. And then at 12:35 p.m. Eastern, folks, we're going to get Fed Chair Jerome Powell speaking. This could be a very, very volatile event. We're going to be looking to see where Jerome Powell is, where his head's at, right? Where he's leaning as it relates to basically dovish or hawkish tones. And then this is going to be important for Opendoor. On Wednesday, September 24th, we're going to get new home sales coming out at 10 a.m. Eastern. Thursday, September 25th, durable goods orders, GDP for Q2, initial jobless claims, existing home sales for August come out 10 a.m. Eastern on Thursday, September 25th. And then Friday, September 26th, we're going to I cannot talk right now. Core PCE, folks. Personal consumption expenditure. This is the Fed's preferred inflation gauge. And we're going to get that again, Friday, September 26th. For the core PCE, the previous was 0.3%, and we are forecasting 0.2%. So it is expected to come in slightly lower. We will see if that happens. And then last but not least, a quick check-in on earnings for the week ahead. So basically this week, what we are going to be looking at, you got AutoZone that's going to be reporting on Tuesday before the bell, September 23rd. You're going to get Micron after the bell on Tuesday. That should be interesting as well. Wednesday, you're going to get Cintas. Not a lot happening really next week, except for Costco. That's a pretty big one, and that will be on Thursday, September 25th after the close. So that's what we got this week for the market prep video. A lot of interesting things going on. Let's see if Opendoor can get back above 10. Let me know out of those stocks that I showed earlier if any of those are on your watch list. If you're invested in any of those, such as Oklo or Lemonade, right? Any of these other plays beyond Opendoor that are catching a lot of retail attention and really institutional attention as well. If you have any particular stock that you would like me to cover, make sure to leave a comment and let me know what you got. Definitely appreciate all the support that we've been getting on this channel. We will be back on Thursday, 6 a.m. Eastern sharp for the midweek check-in. As always, don't forget to like and subscribe. Follow us wherever you listen to podcasts. And folks, as always, remember, plan the trade and trade the plan. Have a good one.